momentum than the dollar at the present. We look at NASDAQ, still on a rate, 1.16% drop from the position where it was. Look at S&P 500, 0.72%. So quickly, let me also just go in a chart so that again you can be able, to see the implementation or interpret of all these instruments live on a chart. Look at when we get on a chart. This is a 1 hour chart, but having a very, very huge candlestick. We go on a 30 minutes. We are having also way huge candlestick that drops all the way from 17,000 on gold, 1,786 drops all the way to 1,765. Couple of pips that actually moves there. I was looking at the NASDAQ, the same thing, drops again all the way to 13,081. I think it wanted to go to 13,000 flat, but if you go to a huge, bigger time frame, look at where it is. To me, I think this drop is not over. I think it will continue all the way dropping, maybe to the position, to this position, to 12,900. By the time we get on Monday, the price of NASDAQ, pretty much I'm thinking it will reach to 12,800. Because remember NASDAQ, just the last week, it was on a 12,138. Push all the way back. In fact, it was on the 19th July, it was sitting on 11,000. Pushes all the way up. It being a bearish trend, and I'm going to explain to you the reason why it's been a bearish trend currently. I think it's going to match the topic that that I have today. So if you look at all the stocks, been a bearish trend stocks. You look at USDT before today, it's been a bearish. It's been a bullish trend from 19 July. Everything starts spiking up. In fact, from 14 July, start spiking up all the way. The price on the 14th, it was sitting at, the 14 was sitting at 30,097. It actually spiked all the way going up to 32,000. Imagine if you were buying any instrument, the USDT, on the 14th of July, and you hold the buy from the 14th July to this, even if you use a very small lot size, 0.02, 0.05, what matters is account size. How much account size do you have for you to be able to hold that instrument so that it can move from 14th July all the way to today, to the 5th of August. But this is what is going to happen to S&P 500, the way I'm thinking. I mean to USDT. Maybe drop a little bit to here, to 32,000. It might be possibility also by Monday when we get in, we might find it's on a 32,050, 59. So to those who actually want to put a trade on a weekend, you're not afraid of swap charges, this is the opportunity. Because if the numbers have dropped of NFP or of employment rate in the United States, the GDP numbers last week, they also dropped. They were expecting the recession to start. Right now, they're saying it's a technical recession at the moment. That means actually the dollar is not doing good. The dollar is not doing better itself. So even if we look at the dollar index, trying to pick up, it was sitting at 105, but the highest point of the dollar index that we've seen for the past week, this was the highest point. And if you look at it, it's 108 to a dollar index. It start dropping all the way to 105. Pick up today because everything else it's dropping. But again, this is not a picking up. It will drop the dollar index according to the results of NFP unemployment rate, maybe to get to this level. The least it can is to get to this level before it made a decision. So it might go to 103. Once it go below 100, you must always know that the dollar is way much weaker than any other major currencies, than euros or even the rand. It would be actually performing better like that. Again, we're looking at the Euro USD, same thing. This is what happened today, dropping all the way down. But if you look at it, it's been a buy trade. Now, what we want to focus today, why it has been the upper trade on all these instruments. The reason why it's been all these instruments, the upper trade, is because of the global conflict that actually is happening right now. But in order you and me to understand what this global conflict happened in fact the markets, right? So we need to go through to understand from the beginning what happened when the conflict was started, 100 years ago or 10 years ago. So we understand the habits of when there is a conflict, this is what the stock market do, or this is what the stock market react most of the time. So yeah, that's the topic of today. Who trade NFP today? Who was trading NFP? Anyone? No one. Mr. Mchali, next. No one trade NFP. all right. Thank you. Welcome, Mr. Mchali. Virginia, welcome. Soli, welcome. Mr. Silano, Sydney, you're most welcome. Without wasting time, I'll jump in directly to what we are actually, prepared today. So this is actually the NFP results starting from July 2021, spikes up, goes all the way to 700% in terms of employment rate. Guys, if you have a question, please stop me immediately, or you can write on a chat. Okay, I can see the message already. All right, Takala traded NFP. Great, I hope you make money with all those spikes selling. Again, here it is on October 2021. Again, it reaches to the same height of a level. 2022, I think it was March before April. It spikes again. I think it was because of the COVID-19. They were studying the new variant from that side. April. So these are past results of NFP. I wanted just to show you in terms of the graph of NFP and where exactly the non-farm payroll it's actually going. Currently, still the United States it's failing to employ a lot of people that can be able to work and provide tax to the country so that they can have a huge GDP and support their community or develop their country. So it's a bigger challenge in the United States. All right. So today we are going to talk about a little bit of wars, the currency war in the Forex market. We want to understand what exactly when we are having this war. The reason why I'm picking up this topic today, a day before, in fact, we can say 2 days ago, there's just a new conflict that just established. There's a conflict right now against China, against Taiwan, and the United States, as always, they are involved in those wars. So we're already coming from seeing the war between Ukraine and Russia, and we have seen how things has been changed. No one was really expecting things to change like that. No one was expecting that oil is gonna go up like that, including cooking oil. No one was expecting things is gonna, be expensive like the way it is. On our cars, we are putting 16 Rand petrol, I think last year. Right now, we are putting 27 Rand a liter per gasoline, per petrol. So when there was a war, there was always opportunity as a trader or as an investor to invest in a global market, right? To be able to invest in a global market and to make sure that you are getting something out of it. And again, to be aware about how exactly the market is actually performing. Hey, Wola Lonwabo, thanks for joining, Lonwabo. All right. Okay. You can do this. All right. So what happens to the stock market when there is, you know, a conflict happening in a world, right? The conflict that we've seen already in Ukraine, increasing a lot of things. We're already witnessing right now another conflict being started. So the stock market is the representation of the host of the country economy, or host of the country economy. When that host of the country enters into the conflict with the stock market, enters into the conflict, then the stock market will move into responsible. Once you understand how the position and investment once you understand the position, then as an investment, you can now be able to make a seizable, a perfect, you know, a decision so that you can make a better profit from whatever that is happening to affect the market, right? So as example, as we said, we saw the war in Russia and Ukraine. We saw how the global sanctioned Russia to not use United States dollar, to not use the monetary fund of the United, to remove a SWIFT from that country. So Russia cannot use the United States dollar for exchanging of anything. That's already affect the Russians in terms of their global economy. In the beginning of that war, we see Russian ruble dropping to the points where it never done for over 20 years, for 2 decades, because of one conflict that actually started. So if I may ask before I go further, in this conflict that just happened between Russia and Ukraine, what most thing that you actually realize that it has moved, except the oil, because it's an obvious one, cars are showing us flames. What other things have you seen that it has actually infect your maybe daily life, or maybe your trading life, anything? Based on the Ukraine and Russia war, what effect have you seen on yourself? Yeah, Soli. Yes, shoot straight, Soli. Soli, oh, Soli raised the hand. All right, Soli, if you can't speak, you can just type it on the chat. No problem. We're gonna go through it when we keep on moving. All right. So generally speaking, during the war, the stock market reflects a popular sentiment of ongoing profitability of the war, right? If the host country appears to be winning, then the stock market will grow as people expected rapid GDP growth from the post-war environment, right? However, if popular sentiment goes against the host country of that specific war, of that specific conflict, and the people expect the war to end badly, then the stock market will again go all the way down. So 2 things that can happen. The stock market can rise all the way up, spiking, or the stock market can go all the way down. As an investor, as someone who wants to participate in a global market, right, that's where you should understand that, okay, all right, there's this type of a conflict. Does this conflict benefit what you are trading, or it benefit what you are trading in a negative way? That's the only key there. Is this instrument being affected by the conflict that is happening? Again, there's some people love to trade the volatility, like the way NFP it was today, right? So you can be able to get a chance and make so much money because of there's a certain conflict that is actually happening at particular time. Sorry about that. Sorry about Mr. FX now. Tansky. It's heavily affected my personal economy. Yeah, my man, it's tough. It's tough. But to me, if you understand what's going on, what is coming to you as a trader, you can be able to make maybe a better choice, right? If we knew that, you know, on a 2011, when the COVID-19 started, I mean, on 2000, was it 2011? On 2000, when the COVID-19 started, we could be able to prepare properly, you know, in terms of the stock market. Because if you're a trader, you have a great opportunity to make so much money, whether there's a conflict or there's no conflict, right? Whether there's a war or there's no war. We just have to know what's going on with that particular conflict and choose a specific instrument to be able to focus at particular time. All right. Any question, please stop me or type on.
US dollar is falling. US dollar is falling. Coach Yusuf.
Oh, US dollar is falling.
Yes, more people need to buy the indices and other currencies paired against.
It's gonna be a very, very long week next week. I mean,
next week it will be crazy one.
I don't think the dollar will pick up from this one.
I don't know, but we see the support at 1.29053. How it will perform anyway. Yeah, but I had a question, a simple question. I missed out on most things. I received a phone call. If you saw, I don't know that. Yeah. So I missed most of things. But I wanted to ask this question. When it comes to one component that I don't understand, how can you set? I know maybe it's out of the topic. Trailing stops, Yusuf. Trailing stops. I've seen this trailing stop most of the time. But how do they work and how can you set them up?
The trading stops. Okay.
Trailing stop.
Trailing stops.
Like trail, then that.
Okay, all right. Okay, I'm gonna try to get the information now and explain to you maybe after halfway or maybe another second. No, you know it does cut. Then we have to join it.
No problem. Okay, great.
Okay, all right. I'm just writing it down so that I shouldn't forget. Okay, I got you. Don't worry. So, how to generate above average market returns? It is important to understand that the wars and their impacts upon the stocks market. This is because by looking to the past, we can better the prediction, the effects that the war will have in the future, right? So what we are doing today, we are actually trying to just get into the war type of affects the market, because of there's a Taiwan and China that is already cooking at the moment. So we don't know that as Mr. Soli said, that the oil has just spiked up. We don't know, maybe by the time we get next month it might be ×2, right? But if you are a person that you don't know these things that is happening, now you're going to start blaming the government, going and protest, breaking everything that the petrol is high, but while it's because of something else. So there's an outlet that affects of the stock market during the World War I and the World War II. It talk about the US stocks market, and also opposing the market so that you can be better understanding the impacts of war upon the stock market. Right. So during the World War I, of course, I was not there. It's just the research. So because of the industrials profited immensely from the war, the United States saw a huge rise in a profit just before entering into the World War I. Many other entrepreneurs, entrepreneur-minded people also profited from the conflict. Supporting the war became a very profitable endeavor. From 1912 to 1914, the United States sold munitions and the weapons for both sides of the war. Once the war ended, all of the part of the capital was unleashed and the US stock market shot up upwards. From 1919 up through to 1928, the US stocks market doubled his total value. That was because of war. Now, there's a key point here. The key point that I want us to highlight. So they sold the munitions and the weapons, right? Now the key point here is who produced these munitions and the weapons, right? And after they produced these things, they were selling it to make money. But us, we don't care about selling, they make money, it's fine. What we want to do is understand which company produced that. If we understand which company produced that type of product that support the war, what we can do, we'll go to stock market and focus on that specific stock. Are we together there? All right. So for example, COVID is happening, COVID-19, WHO announced it that it's a global pandemic, right? Now we look at what was WHO focus on? Bringing the vaccine, right? Which company it was producing the vaccine, right? Johnson & Johnson, for example, Pfizer, for example. Now what do? We go on a stock market and look on those companies, look on Pfizer, look on Johnson & Johnson, for example, see how they're performing, because at that particular time, those are the stocks that actually have volatility. Those are the stocks that actually performing or producing products and make money during that specific time. So same as during the war, there's a companies that produce the immunizations, and then there's the companies that produces the weapons as well. Then according to this, so this was World War I. I think it was before technology and so on and so forth, and World War II. But this is just to give us an idea what exactly we have to focus on it when these things are happening, so that although things are expensive, but there's a certain instrument you can be able to trade and make some money out of it. We can see the chart here. It shows the chart of the US stocks during the World War I. It actually rise from the 10 points all the way to the 40 points from 1914 to 1928. Huge, actually tripled their price value as it says. All right, ladies and gentlemen, there's only 10 minutes left. When it cuts, please let's rejoin again. There's a lot of things that we need to share, including the companies that we can look up to right now when when this China and Taiwan and the Ukraine and Russia, it's happening. So during the World War II, the same thing. A German Weimar Republic would fall in 1933, and the Nazi government will take over and replace that German organization. This was directed because of the major war, which was the World War II. From 1928 up through the late 1930s, the World War experienced one of the worst economic crashes ever. This event is called the Great Depression. To those that have been in the stock market a lot, they know the Great Depression. When you search the Great Depression on YouTube, you can see the videos there that everything, it was crashing. The banks were crashing. So you have money in the bank and you don't know that the war that it's starting right now, it is going actually to affect your bank. Your bank will be crashing, will lose down the value of the money that you have in your account. If you have 20,000 Rand, by the time we end this year, that 20,000 Rand, it might be having a value of a 10,000 Rand. But people didn't know. They realize when things are starting crashing. That's the effect of war. We focus a lot on a war, but we forget to focus on the stocks that actually being affected by conflict when a conflict happened. So when a war finally broke out on September 1989, the US stock market was recovering from the Great Depression. From 1939 up through the end of the war, the US market stagnated, and then after the war, skyrocketed. We can see again the value of US market, how it does from all the way 1939 to 1989, pushing the price all the way up. After the Great Depression, after everything has crashed. So the Great Depression happened when World War II started. By the time it was ending, whoever wins that World War makes that the stock market itself from the United States to spike up. Any questions so far? So far, so good. All right. So you were asking about trailing stop. So a trailing stop is also called the stop loss, right? It's also called the trailing stop loss. So it's this type of market order that sets a stop loss at a specific percentage below an asset market price, rather than on a single value, right? It's a market order, so it's an order. It's the same as, you see, when you get to the market, okay, we're gonna go on a chart after, the second session so that you can see where exactly we are talking about. So it's an order that you're gonna have to set, but when you are setting that order, you set also with a stop loss, right? So it's a sell order that's set it, including the stop loss are there. So that once the market comes, reach at that a trail stop, it hit the trigger, goes all the way with this instrument. Once it gets to the certain resistance where you set a stop loss, then it can stop at that particular time. So it's just a way of trailing stop that looks like it's something else, but pretty much it's just an order, a sell order with a stop loss. Are we good there?
Amazing, amazing. I'm following. Great.
Okay. Cool stuff. We're gonna go on a chart so that we can see this thing properly later after second session. 5 more minutes left, ladies and gentlemen. Please rejoin again once it cut. So 5 best war stocks according to, for August 2022. We are actually in August. So these are stocks that right now they are hot. If you go and invest in these stocks, or if you go in the market on our chart and look for these specific stocks and trade, you will be making money because it has a little bit of volatility. The best war stocks are to buy in 2022 and beyond 2022, because whatever is happening now, it is going to show us a result after all this crisis is done. So the best way stock to buy are BA. I'm going to go through these companies so that you should know what company is this. BA, I think we do have it on our chart. LMT is there, GD is there, and other founder found in this list may also currently benefit from the Russia and the Ukraine crisis. So some of the options can be considered very, undervalued stock that could provide a major returns of reinvestment. There's one of the biggest, stock market company in the United States called Robinhood. It caused a lot of problem. It caused a lot of, a lot of problem. I think it was last year when a GameStop were being, shortened in the stock market last year. And these are one of the company that a lot of people from United States, young people, they focus on Robinhood because it gives you the stocks of conflicts that are actually happening at a particular time. So it's a most of used brokerage for the trading stocks, and all over the stocks in this guide can be traded on any popular brokerage, such as other stuff of brokerage there. Okay, where are we? Okay, we are here. So a war stocks refers to a stock of a company that is involved in the military industry complex within the United States. According to the Global Times, from 2001 to 2021, the stocks of the top 5 military contracts outperformed the stock market by the 58%. So you see, these type of stocks from 2001 to 2021, they actually perform more than the other instruments that are there in the stock market. This includes the company that produce weapons, missiles, war vehicles, defense softwares, and other warfare-related products. So again, in this currently war, we are looking at the company that produce the technology of a war, that produce drones, the drones that are being offered to Ukraine, that produce, drones that maybe the Chinese they're gonna be using, and so on and so forth. So especially with the recent Russia and the Ukraine war, there is a ton of the potential for a certain war stocks to benefit. So guys, now we know there's a war stocks. You can find the war stocks and be able to trade during the conflict. Any questions so far?
Way boys back at it, gotta flood the streets. Had to patch Drake and Puff back after that little beef.
Okay, all right. So the best investors are dead. So this was the article from Fidelity Study. It's telling that the best investors, they are the deads, right? They were actually, having the article to back up the war stocks that you can make so much money during the war. Some of the main risks with investing in a certain war stocks include the following: the high volatility when you are actually investing during the war stocks. Individual stocks, you can also get one individual stocks that has high volatility and trade. The government regulations, so we can see different types of sanctions, different types of countries sanction certain countries because of that. Once that thing happen, you look at that currency pair against each other, see where the market it is. It actually means there's a volatility in that instrument. And sentence of geopolitical conflicts, again, the political conflicts, again, if the certain country is fighting with a certain country, Ukraine versus Russia, but still the Republicans in America and versus the Democrats, they always fight. So they always have a political conflicts against that to see, are you going to support, which one are you going to support, Russia or, Ukraine, right? So through the geopolitics happening, definitely, again, it shows on the stock market. You can see stocks like,